Hi there and welcome back to Dukascopy TV, and it's time for another technical analysis of the markets. And of course we can't do a technical analysis without Jean-Francois Owczarczak from fingraphs.com and MJT. Welcome back, Jean-Francois.
Hi Sinead.
So a lot of central bank news out today, of course. Well, out this week I should say.
Yes, I think we have the Bank of Japan, we have the minutes from the Fed and the ECB. We also have Mr. Jordan speaking from the Swiss National Bank. And we have the Eurogroup discussing or negotiating with Greece to try to find a solution. When you have so many important news, it's probably a good idea just to focus on the trends and to see what the market is telling us, because it does anticipate most of the news. And so we're back on our FinGraphs mosaic here. We have Euro-Dollar, Cable, Dollar-Swiss, Euro-Swiss, Gold, Dollar-Swiss, Dollar-Yen, Brent, and the S&P future. And so we'll start with Euro-Dollar. And our automatic messaging tells us potential intermediate bottom in a downtrend. And we're still in a downtrend. As you can see, we have a longer-term bear, we have a medium-term bear, and we have a short-term bull. So here an investor's view is meant to give you the perspective over the next few quarters on this weekly chart, which we'll have a look. And the weekly chart is still heading lower. We're seeing initial signs of exaggeration with the two envelopes touching each other and our risk index slowly entering the oversold zone. But they are initial exaggerations. And our trend targets are still pointing for possibly prices that could move below 110 down to 106 over the next few quarters. So it would still be a negative over the long term, and any reaction from here we would consider as intermediate for now. So then we look at the daily, which is also in a bear. The daily is the perspective, well, it's one price observation a day, and it gives the perspective over the next few months. And so if we zoom in on the daily, we can see it's still in a bear, and it has reached its impulsive 2 down targets. Impulsive 2 is meant to measure very extended moves. So this was a very extended move, and it has come for now to an exhaustion. So it's quite normal to see a period of consolidation at this stage. Now, are we going to see a wider correction up? Well, we cannot confirm this yet. We see some exaggeration here with the two envelopes touching each other. We do see the oscillator in the oversold zone, but it hasn't really turned yet. It's been a very flat consolidation for now. And so where we can see this consolidation happening is on the hourly chart, so about 8 points a day, and that gives us the perspective over the next few weeks. And so if we zoom into that, we can see that we have been consolidating up. An outright correction is not really at play yet. And to create anything more meaningful, we'd have to move above these gray corrective targets into impulsive up move. And that would be a green price projection. And that could happen above 115.07. So as long as we stay below 115.07, we would consider this as a mere consolidation. And in the context of a medium-term bear and a long-term bear, we would call it only an intermediate bottom in a downtrend.
Some other data out this week. We have the ZEW economic sentiment in Europe, the US Philadelphia Fed manufacturing index, and of course the PPIs for Europe and the US. So what will these do to the markets, do you think?
Well, it will probably have an impact on currencies, but there's other things that play at the moment on currencies, but also on the equity markets, and confirming an acceleration out of the consolidation that we've seen in the US over the last month and a half. So let's go back to our mosaic and look at the S&P futures, also on an investor's view. And the investor's view is telling us potential resume uptrend in a consolidation period. We'll start with the consolidation period that we can see here on the daily. The envelopes are still slightly heading down, so you have a bear, but it's a neutral bear, meaning you don't have targets anymore. So that is, it's the situation just before you resume the uptrend. And so theoretically, we're still in this consolidation, but this consolidation is in the context of a longer-term bull on the weekly chart, so a target over the next few quarters, impulsive 2, so quite extensive targets, extended targets, between 2,200 and 2,400. And the short term has started to move up again. It has broken out of a consolidation period and above the tops that we've seen in January, and still has about a week to go and potential above 2,100 up to 2,140. So we would expect the hourly to drag the daily back into a positive trend, and this positive trend would be confirmed by the longer term weekly trend, which is still heading up.
And finally, of course, what can you tell me about gold currently?
Okay, so gold is into here, sorry about that. And so also an investor's view here. We've been negative on gold over the long term for about 2 years. We can see the longer term weekly trend, so the perspective over the next few quarters, is still heading lower at the moment. We have targets between 990 and 1200, so an average slightly towards the 1100 mark. So there's still potential down. That could extend over the next few quarters. And we do see initial signs of exaggeration. So we've gone a long way. There's probably a bit more to go, but it's true that we have to watch the medium term to see if we can be surprised by a strong counter move. A counter move was initiated about 2 months ago. Here's the daily chart, the perspective over the next few months. We've seen exaggerations on our risk index and this acceleration here. Theoretically, we could still be heading higher up to the 1327 to the 1384 level over the next few months. Now, this consolidation that we've just seen has been quite deep. It did find support towards previous tops that we've seen here in December. What is going to be important is that we don't really want it to go much lower. So if you see here, the hourly made it below its corrective target, and it's now heading in an impulsive down mode. So as long as you have this red negative hourly against this green positive daily, we would have to consider it pretty much neutral. Now there's a sign of which may be a bit more positive, is that our risk index has gone from overbought 3 weeks back now to oversold. It's attempted to turn up, but there too we cannot confirm this resume uptrend yet, as there's more time and price potential left over the next few weeks. So at the moment, we would remain neutral between the daily and the hourly, still negative on the weekly, and so it's probably not the time yet, or we don't have the confirmations to call for a resummance of the uptrend on gold.
As always, it's a pleasure speaking with you, Jean-Francois. Thanks for joining me.
Thank you very much.
That's all from Jean-Francois and myself for now. Thank you for tuning in, and remember to keep clicking back to Dukascopy TV. Bye for now.